Everybody, it's Rspain here, coming to you from my office on Stolo Consantera in San Antonio, Texas, my boardroom. So, real quickly, I'd like to come to you guys, talk to you about 3 different buckets of taxation: tax now, tax deferred, and tax-free. So, if you have any questions or anything may interest you in this video, feel free to reach out to me. My number will be below in the link, all my contact info. Shoot me a message, leave a comment, share it if you'd like. The main purpose of this is to empower from the educational standpoint, so you can be more informed on where to put your money in retirement and how to get more of your money out of retirement, with all in regards to giving the government less in taxes. So with that being said, I appreciate you guys joining in, and I'll just jump right into it. So when we talk about where we can be taxed throughout our life, it's really in 3 buckets. It's a tax now, a tax later, which is your money grows tax deferred, or tax never, which is tax-free money. And we'll get to this later. This is my favorite piece. So when we talk about tax now, what does that look like? Really, it looks like your paycheck every week you're getting taxed on, maybe your savings account, your CDs, you have taxes on that, or your brokerage account. Maybe you have a E-Trade, TD Ameritrade account out there, you're doing some trading in, maybe you're realizing some capital gains, maybe taking some dividends from a fixed income standpoint. So all these things will be considered tax now. A lot of this isn't considered when talking about your retirement accounts and retirement growth and retirement distribution, but it's an important piece to look at to understand where we are as far as getting taxed now. Now, tax deferred, what does tax deferred mean? Basically, it's we make money, we're bringing down our taxable income by these tax deductions, putting it into these retirement accounts that grow over the years, tax deferred, in the markets, maybe you have some other growth exposure, but basically these are the main accounts for retirement. So I'm just going to go right through some of them and touch briefly on the advantages of some of them as well, and who that affects. So your 401k, most people have a 401k in place. A lot of larger companies, they really set you up with a 401k. It grows, like I said, tax deferred. It's all tax deductions off your taxable income. And your maximum contribution to that is $19,000 a year. Now, most companies do a 401k match. Please take advantage of the 401k match. I would advise you strongly on this. The 401k match, a lot of companies do 3, 4, 5, 6% even. And this is free money on the table that the company is giving you to contribute to your 401k. Say it's 5%. You make $100,000. You're putting $5,000 in there. The company matches you $5,000. It's free money. Strongly encourage you to take advantage of that. You have traditional IRAs, a great investment vehicle. You have SEP IRAs. SEP IRAs are a great vehicle for contracted workers. Really, the one thing that sticks out in my mind right now is real estate agents. Some real estate agents might have an amazing year. I'm working with one currently right now. He really deals in the high-end real estate market, so he's going to sell millions of dollars this year going forward based off of his clientele and his listings. So how I'm working with him is we really want to bring down his taxable income. And a way of doing this is by setting up a SEP IRA. You can dump $55,000 into it. So if he's making $200,000 this year, $150,000 this year, it's going to bring down that taxable income by $55,000, being able to defer that into a tax-deferred retirement account, and you can defer that growth until a later date once you're in retirement. It's great for deducting high, and later on we'll be pulling out at a lower tax bracket. So that's really good. The SEP, there's a simple IRA, there's 403Bs. These are for nonprofits, hospitals, Public education, these are great investment vehicles for those workers that they have in place. We have 457 for government workers. TRS, the teacher retirement systems, as well as the TSPs for the thrift savings plan for military. So there are a few more out there, but in general, these are going to fully encompass the majority of retirement plans out there. And like I said, I just want to touch briefly on each one of those and really explain what tax deferred means. So lastly, we're going to get to my favorite piece right here, and who doesn't like tax-free, right? So when we talk about tax-free, there's really only 3 ways of getting tax-free money in retirement. A lot of people aren't contributing to a lot of these, and I would encourage you strongly to meet with your advisor. If you have any questions on how to obtain some of these, contact me. I'd love to sit down with you and talk to you about how we could grow tax-free money for your retirement, and I'll show you a little illustration in a second to really drive the point home and bring it to life of how much more money this will actually give you. So Roth IRAs, amazing investment vehicles, right? I think this is one of the number one investment vehicles with tax advantages that the government gives us access to. You can, if you're under 50 years old, you can put $6,000 a year in there, $12,000 if you have a spouse combined, or if you're over 50 years old, you can contribute $7,000 personally or $14,000 combined based off of you and your significant other. What this does, it's after-tax money, and it, like I said, it grows tax deferred. Well, it grows, but on the back end, you never get taxed on it. So when you pull out this distribution from these gains, unlike here, where you're getting taxed in retirement, you're never getting taxed here and your retirement income, your retirement distribution on that. Municipal bonds, another great investment vehicle. You know, this piece really gets you to invest back into your community. A lot of them, municipal bonds, what's that look like? It looks like a lot of government bonds given by municipalities that give you a pretty good, decent return on your money that's very safe, and also you get to take it out tax-free. And lastly, I'd like to touch on the cash value life insurance portion. Now, you can't grow cash value in life insurance through term policies, but you can through whole life policies and universal life policies. So like variable universal life, where you can really have market exposure, and it's really just like a brokerage account or an investment account tailored off of the life insurance portion. So you have the life insurance death benefit on one side, and you have the cash value on the other side that accumulates growth over the years. And you can actually borrow versus your cash value, and it's almost like you're creating your own bank to borrow from in retirement. And it's all tax-free. It's so many good advantages, but I don't want to go into that right now. But for this concept here, we do want to let you know that the cash value life insurance portion, when you pull from it, it is tax-free. So let's do a little illustration here. Say we have a 401k. We're going to pull out $100,000, example. So $100,000 in retirement. Okay. This puts you in a 22% tax bracket. So we're going to 22%. What's that leave you with right there? Right, $78,000. So if in fact you're pulling from your 401k, if you're pulling from your SEP IRA, from your 403Bs, 457s, TRSs, TSPs, if you're needing that 100 grand in retirement, you're actually only getting 78,000 because the government is taxing you at that 22% tax bracket. Now, I will say one thing. Taxes and tax brackets now are some of the lowest in the times in history. So if you really think about it, I'm not forecasting that taxes go up, but there's a lot of unfunded liabilities out there from the government, and the government's potentially going to have to get the money from somewhere. So chances are this could fluctuate. Like I said, I'm not forecasting people's tax brackets going up, but the purpose of this illustration is for tax diversification, to show you how to keep more of your money and give the government less in retirement again. So, okay, so we're 78,000 of your 100,000 you're pulling from these tax deferred. Now let's go to option 2. Let's go through some tax diversification options. Say we took 50,000 from here, because chances are we're still going to contribute to this tax deferred bucket, right? So we'll take 50,000 from here, and we'll take 50,000 from the tax-free. All right. Okay. So what we're doing here is we're diversifying our retirement income through different income streams here. So what's the taxes that we're going to get taken out on this are? Oh, look, it's tax-free, so we're going to keep the whole 50. Boom. 50K. And now that we have this 50,000 here, what are the taxes that are going to get taken out on this? Well, we're no longer in the 22% tax bracket, right? We're now in the 12% tax bracket. Okay. So we're going to do 12% tax. Roughly $6,000 is going to be taken out. So we get to keep 44,000 from our tax deferred, because we're basically manipulating our tax bracket. We're deducting high, we're taking the deductions versus our income right now at a high level, but when we pull out in retirement, when we have the retirement distribution, we're actually pulling out at a very low tax bracket. As you see here, you're 12% on 50 grand, 0% on the other 50, which is going to combine you $94,000. Now, I don't know about you guys out there, but if I had the opportunity to get $78,000 in retirement per year or $94,000 in retirement per year, I would pick the $94,000 all day long. So, in fact, there's a lot going on up here, but to all sum it up, I just wanted to come to you guys as an educational piece to empower you to understand where our money is currently getting taxed, the strategies surrounding that, and then to be forward thinkers to diversify our tax brackets later in life, so we get to keep more of our money and give less of our money to Uncle Sam. So, in a nutshell, I love to help my clients with tax distribution strategies, manipulating your tax bracket, if you want to call it. It's totally legal. Like I said, I just want to educate and empower everybody out there to go out there, live the best lives for themselves. And, what I'm doing is doing it through investment vehicles and financial concepts. So if you have any questions, like I said, please reach out to me via message on the Facebook links. My contact information will be on there, through my phone, my email, or just come see me in my Stone Oak and Sonterra office. And I'd love to have the conversation of how we can, in fact, maximize our retirement income.